Welcome everybody and welcome to this new QG Academy webinar. And today, a very nice topic, Brazil. My name is Emil Monfils. I'm one of the transfer pricing specialists at Quantera Global, and I wish you a lot of welcome at this special webinar. Why is it special? Because we have two people from Brazil, Francisco and Alexander. Welcome. And today we will discussing with you both, well, the developments of Brazil and the OECD. So first of all, also very welcome, and please introduce yourself to the viewers.
Okay. First of all, thanks a lot for the introduction. My name is Francisco Moreira. I'm a tax partner with Bocater in Brazil. I work with transfer pricing for about 10 years, but I have over 20 years of tax experience. And I've been following closely the OECD developments and the developments of the Brazilian legislation. And it's an honor to be here and to talk to you about it.
So my name is Alexander Monteiro. I'm a partner of Francisco at Bocater also. I have experience in cross-border transactions and outbound and inbound structures from a tax advising standpoint and also tax controversy. So hopefully you can get a lot of good discussions throughout this chat. And thank you very much for the opportunity.
Yeah, so you arrived yesterday, right, in the Netherlands, and then already in your busy schedule, making time for you to have this webinar with us. So thank you very much. I think in this, let's say 1 hour, we will be discussing a couple of OECD Brazil developments. I think for the viewers, if you have any questions already to Francisco or Alexander, please use the chat, and we will try to address all your questions. In case we end up not addressing your questions, then no worries, we will come back to you after the webinar via a separate email or a separate call, what is necessary to reach to you. Guys, well, I think in my thoughts, it was April 2022 when I saw the press conference of the OECD and Brazil, the tax authorities explaining about the OECD. Joining the OECD. First, before we come to that, can you explain a bit more about the timeline of Brazil? Because I think this is a project that's going on quite a while now.
Yes.
So please explain why now the Brazil is really wanting to join the OECD.
Sure. This is a process that has been taking for quite a while. Well, first, we always need to give a political background to that. From 2002 until 2016, we've had in Brazil a government that was more leaning towards the center-left, which is the Workers' Party government. And as a general policy, that government always looked to build alliances and to strengthen economic ties with also the developing nations. So we've had initiatives with China, with India, with Russia, and with South Africa a lot. That's when the BRICS acronym has gained much power and geopolitical power, I would say, to negotiate trade agreements and intercompany and inter-country transactions. But this is interesting because again, for a political reason, we've had the impeachment of President Dilma and then her Vice President Michel Temer. He was always a center to the right, I would say, political inclination. And right after he took over, he started to appoint financial personnel to the economy ministry that they were with close ties to more liberalization of the economy, liberalization of the set of regulations that we've had at the time. So in 2017, Brazil has officially made its bid, its request to join the OECD as a member of the multilateral organism. So when Brazil decided to join the OECD, at that time, a fully review of all the existing legislation and regulations started. And because of that, Brazil started to review, to revoke or adjust several regulations. Let's give some examples. Financial controls, environmental legislation,
data protection
rules, many regulations and legislations, they were modified to be harmonized with the OECD regulamentations. And transfer price taxation in general was one of the fields that needed to be addressed. It's interesting also to note that, for example, as a general tax policy, Brazil has never had a double tax treaty with the UK. But it's interesting to note that in 2017, when Brazil started its bid to join the OECD and the transfer pricing review project, the OECD and Receita Federal decided that they should work together to assess the Brazilian legislation. But a project of such a magnitude needed funds. And the UK Foreign Economic Fostering Office, they decided to become a partner of that project in such a way that, for example, the UK multinationals would not suffer anymore from the double taxation created by the transfer pricing legislation in Brazil. So this is a very interesting element. We've had foreign interest in our project since the beginning, because it's not only the UK, but the US, Germany, countries that do not have a double tax treaty with Brazil today. They were looking it closely to see how it would be harmonized and how it would enhance bilateral trade results as a consequence of the transfer pricing legislation. I like to give this example also. If you look to the Brazilian industry, and the Brazilian National Commerce Confederation has issued a report on their investigation on the consequences of the Brazilian transfer pricing regime being so different than the rest of the world. So Brazil is either the producer of the original commodities or the importer of the finished goods. So, for example, during the Corona crisis, unfortunately, we lost many lives. And although we have several vaccines manufacturing industries in Brazil, we didn't have the technology to manufacture the active ingredient for the vaccines. They were always made either in India or China. So Brazil, at that moment of such a needy, Brazil needed to wait until AstraZeneca or Sinopharm, the major vaccine suppliers at the beginning of the crisis, until they licensed the production of the active ingredient in Brazil, which took almost 1 year to take place. So during that time, Brazil had to enter in line for importation just like any other country. So this can be a consequence of our legislation. Some people might say that I'm wrong, but I strongly believe that, because a company that develops such an important IP but cannot charge a market royalty rate on that is always going to think twice before licensing it to Brazil. And then Brazil gets the second or third generation for each technology. So this could be a problem. And then I was talking about the joint study between Receita Federal and OECD, and that study, which began in 2018, was finalized in April 2022, and the OECD officials, they were extremely successful in demonstrating to the Receita Federal officials that it was not only the protection of the Brazilian corporate tax base, but they were also losing revenues in several situations. One of the examples that they provided is, for example, on the development of intellectual property in Brazil. If we see, for example, that a Brazilian entity that could develop IP and that IP could be sold under our CAP method, the CAP method, they could get the cost, which is very low because Brazil follows the IFRS rules. So from an accounting perspective, the capitalization of costs to build up the cost of an intangible in Brazil is extremely limited. So by doing that way, Brazil could, a Brazilian company could get that small set of costs and includes a 15% markup and basically sell it to a related party overseas. And Brazil does not have a profit split methodology or even a regulation such as the United States that has the commensurate with income standard, in which 3 years, 4 years from the transaction, they would look back and try to compensate the developer of the IP based on a return that would be commensurate with the income that was generated afterwards. So Brazil was losing revenue because of its existing legislation. Another example can be on the intercompany interest rates, because Brazil follows the fixed rates approach. Nowadays, we have like the LIBOR plus 3.5% spread on inbound loans. And if that company has a lower credit rate, it can borrow money overseas at a lower rate than that. And if the related party charging Brazil that fixed rate could create avenue for a small profit shifting overseas. And in some cases, it could be larger. So by explaining that situations to the Brazilian authorities, the OECD officials, they have been strongly successful in demonstrating that it was not the protection of the base. Brazil was losing revenue. So everyone, let's say tax authorities and taxpayers, all of them, they are anxious for this movement nowadays. And
because overall, it will have a positive effect on the Brazil economy, for the multinationals, for the tax authorities themselves.
Yes, for everyone. But we have some strong difficulties to overcome, especially because there will be a change in mindset also. So if we go over to the next slide, I think besides the timeline.
Yeah, just go ahead.
Yes, here it is important to discuss the features, because going back to the press conference and when the joint report was issued, they pointed out several areas where the legislation should be either enhanced or improved. And for instance, the adoption of the arm's length principle. Brazil has always thought that it's legislation that relies on fixed profit margins was a way of protecting its base. But for example, if you have a Brazilian exporter that produces at cost and exports at cost plus 15, and that product, finished product, could be resold elsewhere at a higher profit margin, Brazil would lose revenue. So whenever you look at that type of transaction and you see the application of the arm's length principle, that is for sure the biggest reason why companies that are producing in Brazil will now be able to increase their production in Brazil to provide goods for the Latin region, for instance, and not only to the Brazilian market, because they will be able to get an arm's length compensation, and it will be helpful for the whole economy in general. But then there is a strong issue, and this is where we need to stop a little bit and understand the changing mindset, which must be explained. For example, tax certainty. As of today, the biggest feature and what the Brazilian legislation sometimes creates, provides for a parameter for other developing countries, it is that our methods are certain and embedded in the legislation in such a way that if you comply with what's written in the law, you have no transfer pricing issue. But that's going to change should Brazil adopt the arm's length principle and join the OECD, because the transfer pricing verification is going to become much more on economic facts and circumstances, and rather than on legal issues. Yeah. So, for example, when you are dealing, for instance, with a transfer pricing loan, and you have to test what is the arm's length interest rate. As of today, on our legislation, if you had a fixed rate loan, you basically an inbound loan with a fixed rate. As of today, you have to apply LIBOR plus 3.5%. But the interesting part is that we don't have the LIBOR rate anymore. So you need to find other rates for that. Our legislation wasn't updated. But for instance, as of yesterday, I was here with you guys, and I was seeing you guys do an arm's length search for a comparable rate for an intercompany loan. And then you have to jump into the Bloomberg terminal and try to find loans which have the same characteristics of the one that is being tested. Let's say the same credit rating and the same country of borrowing and the country of providing. So there,
the maturity period.
The maturity period and all of that. So there are many components and many variables. And as of today, we have the certainty. If I apply this rate that is in the law, I'm okay. And now you have to document the search that you made on the Bloomberg terminal and the Excel spreadsheets in which you made the calculation. And in Brazil, we are accustomed, we are used to have everything written in paper and registered. And now we have this change. So I could see even, it's not only the knowledge that we need to construct, because it is a knowledge that is going to be increased year by year if we do adopt the arm's length principle, but also a knowledge that might be unfortunately built upon litigation in Brazil, the tax audit is the tax litigation. So I don't know where we could end up, and some experts, they are a bit concerned about how this openness of the legislation could result in more tax legislation. Right, Alex?
Yeah, no, I was just wanted to jump in and talk a little bit about the first curiosity. Even though our legislation is based on fixed margins and not with the arm's length principle, if you go back into the reasons and we call it explanation of motives of the bill that introduced our TP rules, it's written there that they are passing these margins because they are based on the arm's length principle. So if you go into the motives, there's already arm's length principle there.
Yeah.
So this is kind of like a curiosity.
But it's a tropicalization of the arm's length principle.
But it was used in some discussions into the administrative court to try to challenge and get a different result out of an arm's length situation. But also on also on the point that you're talking about, things that could benefit a whole sector. We do have some sectors that are very, very regulated, even price regulated in terms of medications. And what happened when we had that flotation of the exchange rates, we did have some clients that have to make huge adjustments in their transfer pricing applications because the exchange rate floated in a different time frame than the prices were regulated. So you got a transfer pricing legislation that does not accommodate the business itself. So that's something that has to be dealt with. But you're talking about the tax controversy portion of it. Well, in several countries, you do have, you're talking about cross-border situations. You try to anticipate. So you have, we're talking about the APAs, the bilateral APAs. So you try to anticipate with the governments and sit down and actually have a conversation on what method would suits best for that specific situation. So we can see an improvement in our mutual agreement procedure towards the APA. And also maybe, hopefully, we're going to have also under that map, like in a two-step approach, maybe an arbitration process so that if the countries and the taxpayers, they don't get along with each other, there is another opportunity, and then you're gonna have expert opinions and maybe appraisal reports, and you're gonna have technical analysis on that.
Yes.
Even if you adopt an arbitration that is the baseball approach, which is the most used as based on the Major League Baseball disputes between the players and the clubs, the unions for both parties, but it's basically providing each country would present an alternative why they think their price adjustment is more in line with the arm's length principle, and then you're gonna have a board that's gonna decide which one is best, and so that may force in a way force Brazil to get reasonable approaches towards transfer pricing. So that's something that we might see in the future. So long, what we have been listening to from the Receita Federal is that we're not thinking about having this arbitration clause soon. But I watched, and this is a topic that I've been studying for a long time, a great development on that issue. We did have mutual agreement procedure in our treaty, but we never had normative instructions. Now we have one, and then they got revoked and improved into another one, 2019 and 18. And so we're gonna see probably very pretty much a development in that subject, and probably get an internal arbitration for disputes like that. So hopefully we're going to see a little bit of changing in the tax controversy system also.
Nice, very nice. Yeah, because when we see the discussion about advanced pricing agreements, it is interesting because we as taxpayers, we normally make formal consultation to the tax authorities, and they respond. It takes normally about 1 to 2 years. It could take even longer. And sometimes they even respond that the consultation was not effective in such a way that it didn't address the requirements, so we can't respond. So this gives a lot of uncertainty to Brazilian taxpayers. And when we look into the advanced pricing agreements procedures that other developed countries adopt, in which the taxpayers goes there and make economic presentations and explain why is that return being charged, what is the investment made, what is the profitability of each segment line and each developing line of the company. And then you put all of that into almost a contract in which you you compromise yourself that you are going to apply for the following years with the tax authorities, then you are good to go. And that's a huge change of mindset that we are going to see in Brazil.
Because I think one of the items also is the TP methods that can now be followed as part of the OECD.
Yes.
Because normally in the APA procedure, you will also say, well, this is the intercompany transaction, and this is the P method that is most suitable for the remuneration itself. So I think, would you see there also already something that perhaps will be difficult for also the tax authorities to deal with, because now we have perhaps the cost plus 15, and now you have the TNMM, the profit split method that probably can be used, on which taxpayers perhaps also can apply for an APA on that matter. Will that be?
For sure. There is an increased change in mindset, because going back to the culture and the design of Brazilian tax policy, unfortunately, as a Brazilian, I have to say that bribery and corruption has always been a problem for us and with us. And because of that, our legislation had to be extremely unflexible to avoid this type of approach between taxpayers and tax authorities. So because of that, we have the fixed margins. It creates certainty, and it avoids problems in terms of negotiation and all of that. So when we look into the transfer pricing practice of other countries, in which you could reach a range of results, and you could negotiate somehow one of those results that are economically acceptable, there is a change in the mindset. That's why documentation, in my opinion, is going to become so crucial. When you document your economic study, you need to have the appraisals, the calculations, and all the valuations that you have made reserved, stored in your files, in order to demonstrate from an economics perspective in the future which was the range and why you arrived at that range with the tax authorities. And then there is another concept that we don't have in Brazil, which is the basket approach. And you can give away a higher profitability in one product and give a lower profitability in another product. If it makes sense from an economics perspective, you could offset those two returns. In Brazil, that's totally not accepted on the existing legislation, because you need to test transaction by transaction. So if you go to a tax inspector and you make an economic demonstration, a presentation, and you show that it makes sense from an economic perspective, for instance, in order to sell this type of medicine, I need to also sell on a lower return the equipment that stores the medicine at the hospital. Then it makes sense, for example, like Nespresso. You sell the coffee machines at a lower return because you're going to make profits on the capsules. So all those concepts, they are very good examples of the changing mindset that needs to take place. Because we would need, Nestle probably would have an adjustment on the coffee machine and have an excess return on the capsules that could not be offset based on the existing legislation. But everyone sees, even myself, I'm not an economist, but I see that it makes sense to sell the coffee machine at a lower price, because I want to make people have the coffee machine at home so that they can buy more capsules. So it's a strong change in mindset. We still need to see where it goes, but it's a knowledge and a process that is going to be built over time, in my opinion.
And then do you already feel now that, for example, tax authority is already getting the knowledge, having in order to comply with also OECD methods, or is it still, in your opinion, or what you feel, a long way to go?
This is very interesting because we are seeing, for example, many Receita Federal officials, they are always with the OECD experts in those process, and Thomas Balco, Grace Perez Navarro, and even Pascal Santaman, they went to Brazil to participate and show their support. But we still need to see the lower ranks of the Receita Federal involved, because it will be a huge changing mindset for them as well.
Yeah.
So that's why I say it is a process that is going to be built over time, because now the knowledge is coming from top to the bottom.
Yeah.
So everyone needs to get training. And what the Receita Federal has always said is that they don't have enough personnel involved.
Okay.
The numbers. So in Brazil, in order to become a tax inspector, you go through a contest.
Yeah, public contest.
Public contest, and they create like 100 spots. So the higher 100 grades will be accepted, and once you get in, you have that stability until you retire.
Oh, okay. Yeah.
But because of that, the salaries need to be higher, so the government does not have cash to pay for the number that is needed. They pay for what they can pay. So there is a chicken and the egg movement in which we never know what is more necessary. If they flexibilize this rule and they allow the Receita Federal to maybe reduce the salaries but hire with more flexibility, then they could increase the task force, and that knowledge could be transferred more quickly. But
this is also very cultural.
Again cultural.
Yeah, it's again cultural, and it gets very hard to change depending on the part of the country that you live in.
Yes.
So probably São Paulo, you're gonna have like people more open to that, but maybe in other parts of the country you won't, because there is always this concept of the big state providing. So that's something that has also has played a role.
Yes.
A role, throughout our, in different parts of our culture.
Yes, absolutely. I totally agree. But that would be necessary, or at some point, the Receita Federal officials, they are going to make a calculation. I don't know if there is this ratio. For each percentage of the payroll that I increase, how much more revenue can I get? And then it becomes a calculation of investment that the government is going to make. But again, this is public policy.
Yeah, but it's also tricky because it's not about making tax assessments against the taxpayers, because that's the way people actually see it. So how many people can I audit? How many taxpayers can I get a tax assessment?
And that's have not targets the way, and goals.
That's not the way the mindset has to be between the tax authorities and the taxpayers. They have to be much more collaborative in a way of like joint efforts to.
But that will be a process.
Yes,
taking time.
Yeah. But a tax authority, they could see their role as an enhancer of new investment coming into Brazil.
Exactly.
So how could I help this company build an industry, build a factory here and not in Mexico?
Increase the base and you can lower the rate. That's it.
Yes, and then you increase your inflow of revenues. But that's a changing mindset. Let's see how it develops.
So I already have some questions. So from the viewers, one question is more on the timeline. The expectations was that the TP law will be published in August.
Yes.
But that did not happen. Yes. Do you think that this will happen this year still, or would you expect that it will be after the election?
Very good question, and let me take a step back. we do have the upcoming elections, and President Bolsonaro, he has a more, at least in his speech, a more liberal way of seeing the economy because of his economy minister, which is Mr. Paulo Guedes. So he's a strong supporter of the bid to join the OECD. He has been providing all the support to the project throughout the process, and he was a supporter of the reports. The point is that it is such a difficult change in the legislation that the Receita Federal officials have been drafting the legislation. At least for 1 year, we have been hearing that. And this year in January, the United States of America has given a little push to the process, which is they have issued a Treasury regulation, which is the TD 9959, in which they have targeted countries that are implementing unilateral digital service taxes. And if you read the regulations, it's over 100 pages. They mention also that they won't accept the foreign tax credit out of countries that have implemented unilateral measures, which, in their view, are against the arm's length principle. Yeah. When they said that, trying to reach Spain, the UK, or Italy, indirectly they have hit Brazil, because Brazil is not compliant with the arm's length principle. So as of today, there is a large number of American multinationals operating in Brazil that are having problems with the foreign tax credit. So because of that pressure, even the Receita Federal recognizes that Brazil needs to change the legislation in order to harmonize with the arm's length principle. So it is fair to expect that the provisional measure is going to be sent very soon. But it's also a political movement. In my opinion, I think that the government is trying to evaluate the best political moment to submit such a provisional measure, because they don't want to create a political turmoil out of it. Yeah. It is a measure that the average congressman in Brazil does not know what is transfer pricing, and he's going to hear, is this going to affect my chances of being reelected? And if he understands that it won't affect, he can say, okay, I'm voting for it. Yeah. Any provisional measure in Brazil has a maximum period of 120 days. It's 60 days with a prorogation, extension of 60 to be approved. But until, let's say, until the end of the year, the legislative sessions are going to be extremely affected by the elections, because we have elections that might renew over half of the Congress, because we have elections to the Senate, not all of it, but at least 1/3, and elections to the Congress, which all the congressmen try to be reelected, but there is new congressmen and congresswoman coming in. So the biggest point here is that we have a need to adjust to the arm's length principle to not reduce the inflow of American investment in Brazil. And that could, in my honest opinion, that could push the presentation of the provisional measure. Once the provisional measure is presented, and if it's presented before 120 days until the end of the legislative period, which would be early December, then I could say we can have a new TP legislation by 2023. So keep that in mind. And we are going to issue to all the Quantera Global Network interested in this topic, we are going to issue emails monitoring that, because if the provisional measure is presented within a reasonable time frame, the legislation could be changed to be effective next year. But if it's not, then it could be approved this year, but to enter into force only next year. We need to follow the legislative developments to understand when it will be enforced, because well, I have a quote that in Brazil, everything could happen, including nothing. So there could be the chance that because of the political situation, the provisional measure is kept within the drawer, and then Bolsonaro can leave. That could be expected, because he's second place in the polls. As of, if the elections were today, he would leave. And the new the leading in the polls is President Lula, and he has a more center-left position, which would be aligned with the position before President Temer, which I have explained at the beginning. And because of that, they could see the arm's length principle adoption as a more secondary economic measure. And it could slow down in terms of rebuilding the convincement that the existing political government has that it's a necessary measure. So we could go back 2 years in the timeline in terms of adoption. So that's why that's why I go back to my quote. Anything could happen, including nothing. So we have to see and understand that it is a very extremely delicate moment. But we have never been closer to adopting it than today.
Very positive.
Yes.
And let's stay positive and hope that will be implemented as soon as possible.
Yes.
So another question from one of our viewers relates to customs.
Okay.
So what effect will an update of the Brazilian transfer pricing rules have on the customs valuation process? It says, since under the normative instruction of the RFB is allowed to use TP elements to determine import prices.
Well, I see that as an enhancement, because once you have TP methods that are more aligned with the economic reality of the transaction, that is more aligned also with the customs valuation methodology. And Brazil is an adopter of the GATT, a signatory member. So economic appraisals and all of that can be used as secondary elements to sustain your customs valuation methodology. So I see that as an improvement. I don't know if Alex has any comments.
The same. It was challenged before. We did have that situation and challenge before the administrative courts and even the judicial courts. Why can Receita Federal has one hat to tax importation and other hat to limit the deductions? But the way it went in the past was that that's possible. So there were two separate things. But I guess the more you are aligned with the economic reality, the more close this price is going to be.
Okay, thank you. Perhaps looking at the next slide with also some other items, Francisco and Alexander, which do you feel really stand out and is something that you really would like to give as a heads up to the viewers?
Okay, to make the most of our time, let me jump into two specific items. The first one is the intangibles. Both me and Alex, we have written an article studying the 3M case in the US, which deals with the US tax assessment that the company 3M received because they were not charging an arm's length compensation for the use of the trademark to Brazil. Remember that Brazil has the Portaria 436 of 1958, which limits the royalty payments for trademarks to 1% of the net sales. And this can be an issue when you do an arm's length study that proves that the brand is extremely relevant for the generation of the revenue. In that case, 3M was assessed to charge 6.5% royalty rate for the license. And they basically defended themselves, explaining that in Brazil there was a legal limitation, and they could pay not more than 1%. And there was a line of cases in the US sustaining that because of the legal limitation, they would succeed. But unfortunately, they decided to settle the case, so we didn't see the outcome. But it is interesting to show that this problem is not a problem of profit shifting. It is a problem of creating economic difficulties to multinationals that are investing heavily into Brazil. Yeah. So once you see that change and you accept that Brazil pays an arm's length return for a royalty, that is going to be a very significant rate change. Because I go back to my initial example. Brazil nowadays ends up receiving second or third generation technology because the Brazilian factories won't be able to pay an arm's length return on the most up-to-date technology. So this is an improvement for Brazilian consumers, for the Brazilian market, because they are going to be able to receive better developed products. And on top of that, the existing legislation specifically claims that any payments for trademarks or for inbound royalties that generate outbound royalty payments, they are outside of the scope of the transfer pricing legislation because of the existing percentages that are limited in the law. So once you have that change and you allow the Brazilian companies to import more technology, and then you have another problem, which is the biggest majority of double tax treaties signed by Brazil, they deviate from the OECD model convention, and they always apply a withholding tax on royalties. So Brazil already has its protection because the outbound royalty payments are going to be subject to normally 15%. Some treaties reduce it to 10%. So there will be some level of revenue being kept in Brazil because you get the deduction for 34%, but you still have the withholding tax rate. So it is not a matter of profit shifting. It is not a matter of revenues. It is just a matter of understanding the economic change that it might cause. And the second biggest change that I wanted to highlight is on TP documentation. Nowadays, Brazilian companies, they have all of their accounting entries on an electronic system, which is named SPAD. All the accounting entries, they are uploaded to a public system, and then the government can review those transactions, and that is the basis for the transfer pricing calculation that goes in the income tax return. The biggest change is that if Brazil adopts the worldwide arm's length principle, that might continue the transfer pricing information in the accounting records. But Brazil will have to implement the master file and the local file. Yeah. Brazil already has a country-by-country report. It is embedded in our legislation. But the number of multinationals with worldwide revenues exceeding 750 million euros annually is very reduced. But the number of companies that are going to start drafting their master files and will start to have their master files translated into Portuguese to be kept in Brazil, to be shown to the local authorities, is going to increase. So many companies in Brazil, they will need to also to have that mindset changed, because
do you think there's a certain transition time taken into account for example, that once it is adopted, OECD, do you think that well, I mean, the Brazilian companies will need to have sufficient time also to prepare their documentation to set up everything? Is there anything about transition time?
I think so. I think so. In the past, when some other types of legislation were adopted, we've had periods where the maintenance of the previous regime was optional. So some companies will be able to opt to stay in the existing regime or to adopt the new one.
Yeah.
And we already know that many multinationals operating in Brazil, they make both calculations, the Brazilian calculation and the OECD calculation, because they need to report to the headquarters. So because of that, those companies will be able to apply from day one. As some other Brazilian companies, they will need to have a period to adapt. So they will need to engage with outside experts to assist, to consult with the tax authorities, to understand their scenario. So for them, there probably is going to be a grace period of 1 or 2 years in which they will have to adapt. That needs to be foreseen in the legislation.
Okay.
No, I would just say that even for Receita Federal, they need to adjust because they're not used to the massive
Exactly,
file.
I would expect that also indeed. I'm looking at the time. We've only got 5 minutes left.
Oh.
And it's time is running fast. And I got also one question from one of the viewers. So in Brazil, many multinationals are used to report recurring tax losses. How should these companies prepare for an OECD environment where profitability is expected when compared to companies with the same level of risk, functions, and assets?
Well, that's a very good analysis, because if that company is running on a loss situation, if you look, I like to give the limited risk distribution example. If you look to the OECD transfer pricing guidelines, that company that is operating in a loss situation, it would become a limited risk distributor, and it would have a fixed return, arm's length return that is lower but necessary. So that company would have a change in its financial results because of the transfer pricing legislation. It would resell on a lower margin, but it would probably get the compensation for the losses out of the headquarters. So that's what we call the variable royalty or variable revenue that would come into Brazil, would be a result of the transfer pricing developments. And sometimes a situation that has been comfortable for this multinational might become not an issue, but a change in the way they operate. Because this company that has several losses is probably needing to receive loans and capital increases to cover for the losses. So that's a good way to change it, because you would charge a variable revenue to cover for those losses, because they should be borne by the headquarters at an arm's length transaction.
Yeah.
Okay.
Yes, sounds good. And then perhaps the last slide on our presentation, which deals with the outlook.
Yes. Mm-hmm. Well, we as I said, much of it has I have already touched upon. There is a chance. I assess that chance as a small chance that we have the new system in place in 2023. I think it is a reasonable possibility that the provisional measure is presented this year, but it might probably be approved, depending on the pressure of the US multinationals, early next year. So if it's approved early next year, it would be enforced from 2024. And this would give a little bit more room for companies to prepare for the implementation. But again, it is much more of a political rather than a technical issue. And that's why we need to keep monitoring the timeline for it to be approved.
And next to transfer price developments, would you also expect changes in, for example, corporate income tax rate, withholding tax rates? Because I think one of the challenges is with respect to services.
Yes.
Imputation of services, which are taxed.
That's
quite
a very
highly.
Good point.
So,
yes, because we were discussing this issue on our preparations. For example, the concept of low value-added services, which in Brazil companies need to adjust because sometimes if they import any service from overseas from a related party, besides the methodology that we have, we also need to pay the almost 50%, 50% on the importation of services taxation. So, of course, there needs to be a change in the legislation to allow those low value-added services, which are foreseen in the transfer pricing guidelines, as services outside of the scope of the importation of services taxation. This is because it's going to create what we call in Brazil a jabuticaba, which is a fruit that only exists in Brazil, which is the concept is embedded in the legislation, but if you apply, you're going to have a much higher taxation, which equivalates to a double taxation. So that's the one of the challenges, and that's something that we need to look into our legislation from a broad perspective, and not only the transfer pricing. So after that, other developments are going to be needed. Besides the tax reform issue, which is a whole subject for probable another webinar that we could organize to go over next year, should we have the tax reform in place.
So yes, and I think that would be a very good idea. I think the viewers will also be very interested in being updated in that respect. I'm looking at the time and it's 5 o'clock, so that means that we are ending this webinar. I want to thank you for joining this webinar and to providing us with all the knowledge you have on the Brazil OECD developments, the outlook. I would like to thank the viewers for taking the time to look at this webinar. This webinar is also being recorded and will be made available later on via our website, Quantera Global website, but also can be shared via email if you drop us an email or send us a message. So thank you very much, and looking forward to meeting you and all the viewers next time on our next QG Academy webinar. Thank you very much. Have a nice day. Bye.
Thank you. Bye-bye.
Thank you.
En dan kan ik continue.